Hello everybody, Daedalus Investments here. Welcome to our very first video in a series of videos where we're going to be basically just kind of analyzing certain individual stocks fundamentally and providing our own convictions on them. So without further ado, we're just going to get right into the video. The stock of the day is going to be Malibu Boats. Just to give a quick overview of the stock, it's pretty much just a company that specializes in recreational boat making. They specialize in making sport boats, and they operate under 4 brands because of a couple of acquisitions they've made in the past. They operate under Axis Boats, Pursuit Boats, Cobalt Boats, and obviously their namesake Malibu Boats. They make money obviously by selling these boats, and they do it through these independent dealer networks, and we'll basically touch more upon that later on in the video. So here at a glance, we've got Malibu Boats here trading at $75.53, which is roughly 17% off of its 52-week highs. So that's the reason why I decided to chose to do an analysis on this stock, because as I read further, I realized that the stock has the #1 market share in the boating industry, which is a really niche industry, and obviously the stock is kind of depressed from its highs. So let's just get right into that. Here we see that the market cap is $1.57 billion, and that places it right at the border between a small and a mid-cap stock. We also see that the company is trading at 19 times its earnings multiple. That isn't bad. We're just going to see later on in the video whether or not this is a justified valuation. So in order to assess the financial strength of this company, I'm going to employ a few scores, and these scores are going to be the Altman Z-score, Piotrowski F-score, and Beanish M-score. The reason that I like to use certain scores is because each of these scores is made by reputable people, and they combine multiple aspects of financial statements and balance sheets, and they create a comprehensive and easy to look at indicator that gives you basically an indication of how healthy the company's finances are. So, without more talking, here the Altman Z-score is the first score we're going to look at, which takes into account a lot of things like capital expenditures, liabilities, sales, earnings, etc. We see that Malibu Boats' Altman Z-score is 4.58, and this is really strong because the closer that an Altman Z-score is to 0, the more distressed a company's financial situation is. So we see here that Altman Z-score is clearly in the safe zone for Malibu Boats, and checks off one of the boxes there. The second thing that we're going to look at is going to be the Piotrowski F-score. This is another really similar indicator, and it spits out from a range of 0 to 9, and anything above 5 tends to indicate a healthy balance sheet for companies. And here we see that the Piotrowski F-score is 6 for the company, so that is in the healthy range, and that checks off another box. So the next thing that we're going to do to analyze a little bit more of the financial strength and familiarize ourselves with the business model is read into the 10K forms. And the 10K forms are basically annual reports that are put out by companies, and it kind of just gives a little more of an indication of where the company is headed. And basically here we are going to be looking at 2 sections of the 10K forms. Item number 2, which is going to be the risk factors, and item number 7, which is going to be management's assessment of where the stock is going to be headed in the future. And here we have, we're just reading these and briefly skimming over this because I don't want to do a whole in-depth analysis on a 10K because that deserves its own video and takes a very, very long time to do. And here I'm just trying to familiarize myself with the business model, so I'm just going to try to glean whatever I can from these limited minutes and take it from there. So here, I've just for ease of use and stuff, I've just highlighted things that are specific to this company and things that I find unique. And the first thing here is going to be the fact that they took a revolving loan in order to, combat the liquidity shortage of 2020, and they were able to pay it off. So that means that they have a sustainable credit line that they can constantly tap for tumultuous times. Here it's just a blanket statement that says general economic indicators will definitely have an impact on the company. Here, this is something that's going to be specific to the company because in the boating industry, it's really dependent on consumer sentiment and how people are feeling and a lot of other things that are beyond their control. And they also touch upon that here as well with weather conditions. But I don't see this as a huge risk, even though it is posed as one, just because of the fact that I'm sure that Malibu Boats does have something in order to combat this. The next thing here is going to be also unique to the company. We saw earlier that the company makes its money by selling its boats through these independent dealers. And basically, all I can see from this is that the financial health of the dealers is it has a really big impact on the financial health of Malibu Boats as a whole. And that's not really a risk. It just tells me that Malibu Boats needs to hold a really good relationship with its workers. And I see the same thing here about the GM strike and all that stuff. Same thing here as well. Um, Here's talking about vertical integrations as a risk. While it is a risk because it is an aggressive business strategy, I don't think that it's a huge risk for this company because I think it's the correct decision that they are making. Because in an industry like boating, that they have to differentiate themselves between the competition there, and so I think it's really imperative that they do something like vertical integration to get control of all the areas of production and really try to separate themselves from the competition. And competition is what this section is also talking about. The boating industry is heavily competitive, and so it's important that companies keep on innovating in order to maintain whatever market share that they end up having. So that's there. That's gonna end the risk factors portion of it. The next thing we're going to look at is the management's assessment of the company. And here is obviously the overview. We don't need to read so much into that except these, which are the prices of each Malibu boat. And the reason I highlighted these is because I wanted to show you guys that they are able to target a really wide audience. They don't have just a concentrated market share, and so I think this will really help them out in terms of diversifying their assets and everything. Here's just a bunch of other blanket statements. Here again, as it relates to competition, once more, they're constantly reinvesting back into research and development, and this is really, really helpful for them because again, they're separating themselves from the competition and are able to gain a competitive advantage over everyone else. Here again, same thing. So those are pretty much the most important things that I could glean from both item 2 and item 7 of the 10Ks, and I think that we familiarized ourselves with the business model. And overall, I think that it checks all of the boxes financially. So I'm really happy with that. Check mark in the financial strength. The next thing that we're going to try to assess is profitability and how profitable a company is and how sustainable it is. The first thing that we're going to look at is probably try to assess profit margin and try to calculate that. And the way we're going to do that is by dividing the net income for the most recent quarter by the revenue for the most recent quarter. And that's going to end up to total about 13%. That's really, really good because for a company like this that tends to hold a lot of inventory and have a lot of overhead costs and stuff in order to build manufacture. I'm looking for a profit margin that's a little above 10%, and this definitely delivered there, so check mark there. The next thing that I'm also going to look at is operating margin. The operating margin here, it's calculated very similarly. It's about 15%, so I'm also, again, really happy with that because the industry average is about 8%, so it handsomely beats the margins there. The next thing that we're going to look at is we're going to head over to Finviz here, and we're going to take a look at the return on assets and the return on equity. Here we see that they are 13.7% and 28% respectively, and these also beat the margins for the industry averages because the industry average for both ROA and ROE is 9 and 10% respectively. So again, handsomely beating the margins there, and again checks another box. Next, we're going to go back to Tingo here. And we're gonna take a look and see if we're gonna go to another website here called Lazy FA, and basically this is just an easy way for me to tell a bunch of stuff about revenue, and has a lot of data right here that's very easy on the eyes. Basically the only thing that we're gonna glean from this is whether or not revenue is increasing and whether or not EPS is increasing proportional to that. And at a glance, it definitely does. EPS increasing and revenue increasing. And this is really good because it's actually, from here, it looks to be an exponential increase. And I think that's there as a result of the acquisitions they made along with the vertical integration that they started to go into. And so this is how they're able to hold their market share. And I even see that they held almost the same revenue profit line during the 2020 pandemic year. So that's a really good sign as well. And once the recovery mode starts to come into 2021 and stuff, I think we'll see a number that's even higher than this. So again, very, very happy. This is another indicator. And overall, I think it checks all the boxes on profitability. So profitability is definitely a check mark here. The last thing that we're going to try to assess is a valuation standpoint and see whether or not this company's valuation is justified. We're going to see that using these indicators here, PE, forward PE, etc. Obviously, the PE we talked about in the beginning, it's trading at a 19 times earnings multiple. I tend to look for PE ratios that are under 20, but again, that can be subjective depending on whether or not the company is strong in other aspects. And here I can definitely see that Malibu Boats is strong both financially and from a profit standpoint. So I would say that a 19 times earnings multiple is 100% justified. I also see that the forward PE is actually low, and I think this is there to compensate for their massive and really fast revenue growth that they've been experiencing over the past few years. So for that, the forward PE is also down. Is also really low. The PEG is really good. The only thing that I see that's of a concern here is the price to book ratio, which is really, really high at 4.74. I don't really like that. I usually tend to look at stocks that have a price to book ratio of under 1 or under 3. But again, this is the only red flag that I've seen throughout the entire video. So I'm overall really, really happy with everything, and I think that it definitely checks the box from a valuation standpoint as well. The last thing that we're going to look at to, just kind of assess our conviction is see what analyst target ratings are for the stock, just to see if they're bullish or not. And just from this page, we see that the target price averages $95.71, which is well above the $75.53 mark that it's at right now. And we see that the analyst recommendation is 1.90, which is well into the buy zone, because it's on a scale from 1 to 5. Anything from 1 to 2 is usually either a moderate or strong buy, so that's very good. The next thing that we're going to do is head over to tip ranks. And we see here that Malibu Boats has a lot of upside in terms of analyst price targets. They all rated as a strong buy, and even the lowest analyst price target is $90, which is again well above the $75 price that it's at right now. So again, overall, I see that this company checks many boxes on many levels, and I really, really like this stock, and I'm really happy for the future. If I was gonna offer a conviction, I would say definitely somewhere between a moderate and a strong buy. I still think that some of these valuation metrics can go down to make it a little bit juicier, but again, it doesn't have to really dip that much for me to start to enter a position into here. So I really like what I see overall with the stock, and I'm really excited to see what comes to the future for this company. So that about wraps it up for this video. Feel free to PM me any questions, concerns regarding this video, and let me know if you want to see anything touched upon in the future videos, and let me know what stock you guys would like to see next as well. Overall, again, I love the video today. I'm really happy with it. Thanks for tuning in. Thanks for staying back. And until next time, guys, I'll see you all later. Thank you.